Hello everybody, today we are going to start with the first chapter and we are particularly covering Essay 200, all the content which is related to Essay 200. Now firstly, this chapter contains the definition of audit, which is quite important. Now as per ICAI and as per chapter 1, the definition of audit is that audit is an independent examination of the financial information of an entity, and this will not depend on whether the entity is profit oriented or not. It will be irrespective also of the size and its legal form. But when this examination is conducted with a view to express an opinion, then it is known as an audit. If we sum up the entire definition, an audit is an independent examination of financial information of an entity, whether that entity is profit oriented or not, and irrespective of the size and legal form, when such examination is held with a view of expressing an opinion. Now I will cover Essay 200. Essay 200, which is given in this particular chapter, and Essay 200 is defined as overall objectives of independent auditor and the conduct of audit in accordance with the standards of audit. It is a quite lengthy name and it's broken into two parts. The first part is that overall objectives of the independent auditor and the conduct of audit in accordance with the standards of audit. Now there are two main objectives which are there under Essay 200 with regards to an audit. The first one is to to find a reasonable assurance that the financial statements are not materially misstated in order to express an opinion on those financial statements and to express an opinion if they are made as per the applicable financial reporting framework or not. And second would be to report on the financial statements and communicate that as which is required by the standards on auditing and whatever is found in the auditor's findings. So these two, if we properly state these two, the first one is that to obtain a reasonable assurance about whether the financial statements as a whole are free from material misstatements due to fraud or error, enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects in accordance with applicable financial reporting framework or not. So if we break this down, the first thing is that we have to obtain a reasonable assurance. Reasonable assurance about what? That if the financial statements as a whole are free from material misstatements due to fraud and error. So material misstatements are due to either fraud or error, right? So we have to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error. Then this particular thing will enable the auditor to express an opinion on whether the financial statements have been prepared as per the applicable financial reporting framework in all material respects. In all material respects, because it 100% cannot be as per the applicable FRF, because it will depend upon the entity. Now, the next one is to report on the financial statements and communicate this as per which is required by the standards on auditing and depends upon the auditor's findings. So if we repeat both the objectives of Essay 200, the first one is to obtain reasonable assurance about whether the financial statements as a whole are free from material misstatements, whether due to fraud or error, and enabling the auditor to express an opinion on whether the financial statements are prepared in all material respects as per the applicable financial reporting framework. And second is to report on the financial statements and communicate in accordance with the essays as per the auditor's findings. Now we will cover inherent limitations of audit. Now we know in the objectives of audit that audit provides reasonable assurance only and not absolute assurance. This is because there are certain inherent limitations in the audit. So what are these inherent limitations? Now here we know that auditor cannot obtain absolute assurance and he cannot reduce his audit risk to zero. This is due to the inherent limitations. Now what are these inherent limitations? What are the factors which lead to these inherent limitations? The first one is the nature of financial reporting. So financial reporting has such a nature which leads to the auditor not being able to obtain absolute assurance. Now, what are the points covered under this? So, the preparation of financial statements involves the use of judgment by the management. Now, management uses a lot of judgment in accounting estimates for providing various provisions. So since it's involving a lot of judgments by the management, this is also a part of this nature of financial reporting. Now, these judgments may be subjective in nature and also involve a degree of uncertainty. Therefore, the auditor is not able to obtain absolute assurance that financial statements are free from material misstatements due to fraud or error. Now, the first point is about the judgments of management. Secondly, now one of the premises, that is one of the preconditions for audit, are that the management will acknowledge its responsibility with regards to preparation of financial statements in accordance with the applicable applicable financial reporting framework, and will also devise the suitable internal controls. However, these internal controls and the financial reporting framework, they are not effective. That is, the internal controls may not be operating effectively due to their inherent limitations, and therefore this causes a problem in the financial reporting. Due to this nature of financial reporting, the auditor cannot provide an absolute assurance over here. Now, the next point is the nature of audit procedures. Now, how the nature of audit procedures, in order to provide a reasonable assurance, he has to gain sufficient and appropriate audit evidence about that the financial statements as a whole are free from material misstatements, so that he can express an opinion that financial statements have been prepared materially as per the financial reporting framework. And to do that, he does various audit procedures. Now, these audit procedures have the nature of these audit procedures also leads to the inherent limitations in audit. The auditor, so starting with the points which are covered under this, the auditor may plan and perform his audit procedures in accordance with the essays, but there are practical and legal limitations on his ability to obtain sufficient and appropriate audit evidence. So now he may plan and perform his audit procedures as per the essays, but there are practical as well as legal limitations on his ability to obtain sufficient and appropriate audit evidence by applying these audit procedures. Now, what are the practical limitations? So the practical limitations can be that the auditor, he is not testing all the transactions, but he is doing the sampling and analyzing the review procedures. So these are certain practical limitations which will are going to affect his ability to obtain sufficient and appropriate audit evidence. Secondly, the legal limitations are that management may not provide him complete information, and the auditor cannot force information from them. He can only report that. So this is also a legal limitation which will limit the ability of the auditors to obtain sufficient and appropriate audit evidence. Nextly, the management only might be very dishonest and unscrupulous. So this can also lead to various schemes which the auditor might not be able to find. For example, they might have entered into any related party transactions, and such transactions might just only be on paper and not actually occurred, and therefore the auditor might not be aware of such related party transactions or any such relationships, and the audit procedures will not be able to find out. So due to the nature of audit procedures, there are inherent limitations in the audit. Now, next is that it is not in the nature of investigation. So audit is not an official investigation, and therefore the auditor will not be able to obtain the absolute assurance that the financial statements are free from material misstatements. We covered this in the scope that the audit is not an official investigation. Next is the timeliness of financial reporting and the decrease in the relevance of the financial information. So after the time passes, the relevance of the information will decrease. So because the relevance of information will decrease over the passing time, the auditor cannot verify each and every transaction as well. So he needs to strike a balance between obtaining the cost of obtaining this information and the reliability of the information. So if he wants reliable information, he will have to invest more cost, but that is not possible. So that is why he has to strike a balance between these two things. Now, here one very important point is mentioned, that is, there is a time constraint in the statutory audit process, and however, this particular time constraint cannot be used as an excuse in performing performing an audit procedures where any other alternative is not present for that audit procedure. Next is the future events. So due to the current future events, the future events or conditions may affect the entity adversely, and it can impact the entity's ability to continue as a going concern. So the business may cease to exist because of the change in the market conditions, emergence of new businesses, etc. And the auditor cannot guarantee that the financials are free from material misstatements due to fraud and errors because of this reason. So summing it up, nature of the financial reporting, nature of audit procedures, nature of it is not in the nature of investigation, then timeliness of financial reporting, and decrease on relevance of information over time, and lastly future events. These are the inherent limitations of audit.